Hey, what's going on, traders? Welcome back for another Elliott wave dose right here with yours truly, Richard, with Lionheart Elliott wave analysis. Oh yeah, wow, we had huge volatility recently, okay, due to the US elections and a lot of other things, but we will actually get started. We are exactly on track with the Elliott wave counts, movements, etc. So many things are actually in play. We shall actually start technical analysis right after the intro. Alright, welcome back once again. This is Richard, the Elliott Wave Jedi, the Wave Walker. Yeah, I think I have here with me some actual traders. We are live on YouTube, obviously, just the way you guys like it. So you guys know the drill. If you want to shoot out some questions, if you want to communicate, there's a live chat there. If you're watching this later, obviously support the brother out with a like, share, etc., and maybe just comment there if you want to say something. Yep. So yeah, before we get started, I'd like to know if you guys, obviously, if everything's okay, if you guys can actually hear me, everything. So we shall actually proceed with the analysis. Just write your write yes if you can actually hear me, if the audio, video is okay, etc. Okay, so let's just kick things off right here while you guys comment there. Okay, let's make it interactive. I do have a lot of things to share with you all today, because the market is about to basically make a very, important decision for the next year or years or so. So we'll basically get around that, but right before that, okay, if you let's say, I like to actually say something. If you like what you see, if you want to work with me directly, or if you want to join my programs, etc., please, just visit the website, see if you like it. Yeah, and if you want to work with me directly, there are programs for that as well: one-on-one private sessions, private signals, etc., and obviously private trading as well, because that's what we do. All right, so let's actually continue. I'm actually on this VIX chart on the weekly. I'm gonna start. I'm gonna kick things off today with the macro perspective, because it's a crucial time in the markets, and we need to like reassess a little bit on what's happening. So basically, I like to remind you, of this volatility index, the VIX, right? The fear and greed sentiment in the markets, etc. Now, I'm gonna make an example right here, as you guys can, as you guys can actually see. When the VIX actually spikes, the market goes into terror mode, right? So basically, it's a fear sentiment. When the VIX basically drops, this is a greed sentiment right here. When basically stocks, indices go up, etc., and everybody is, nice, calm, and the situation is nice and peachy. But when there's, rises and spikes like that, well, that's basically fear, sentiment and stuff like that. I'm sure you guys know that. But yeah, let's say we have basically, before we had the 1998.com sentiment, dot-com bubble, then the 2008 recession, right, when the VIX actually spiked, and now we have this with the COVID virus lockdowns, etc., right? So we are in a phase right here, y'all. Okay, I'm not saying that the VIX will not actually drop. It will. Okay, but we are in this we are in this phases right before that. Okay, so I like to actually let you guys know that we most likely, the market will extend the complexity within the structures and the sideways movements before the bull market will actually really commence. So we're basically in for a treat. I will translate this. I will translate all this into charts. But right before I do, I like to actually show you guys something, because I've been receiving some questions. Hey man, I mean, did you guys did you know that the market is going to drop like this and this and that? Well, first of all, I posted I mean I published that course back on February 2nd, 2018, when I said the market will actually enter this type of period bearishness, etc. Secondly, okay, on July 11, 2018, I actually posted this when I said, okay, guys, look, something big is coming, right? And basically with with precise analysis and backing things up and stuff like that. So July 11, 2018, I said the VIX will actually come and something big is coming in the markets, right? And you can actually see it, and you guys can actually see this arrow, the levels, etc. And boom, right? So um, don't tell me that I didn't know that something big was coming. Of course, I didn't know that a virus is coming, gonna stay inside, but I knew something like that will actually come. Okay, so what's next for the VIX? What I believe that was just an example. Okay, I have many of those. What's next for the VIX? What I believe will actually happen? Well, we are in a phase of contractions before this type of drop, which I would actually think that it will actually happen like this, some sort of ending diagonal or something like that. The last fifth leg on the indices for the upside, but until then, there's a long way to go. This is a weekly chart, so but just as awareness right there, just to raise awareness in your guys' minds, to open that door to that little box, just to put something inside and leave it there, right? Next, the weekly chart on Bitcoin, right? Because, you know, some of you think that I'm actually not monitoring Bitcoin, like, because I'm not. Obviously, it's posted every day in my wave counts and updates section, okay? But allow me to actually, when everything was going crazy and September 27th, 2018, when people thought that it was going like, bust and stuff like that, I said, no, 3,000 is a very nice level to actually buy Bitcoins. And that's exactly when the bull commenced, right? And right after that, after it entered, I mean, when it entered the consolidation period, August 9th, 2019, I said, look, we're going to have a correction, 61.8, 78.6, and then boom on the upside, right? It's gonna rise, and basically this is actually what happened there. I'm not sure. Okay, look like this. So after that, it actually rose right about there. Okay, so after that, I mean the piece of resistance right here, because some people that don't actually know what was actually my reason for that. Well, it was a 1-2, 1-2 after this consolidation period, right? And then guess what we're doing now with Bitcoin? Guess, right? We're starting something. What are we starting? And basically, allow me to actually, put some pinpoints right here. I don't really like the way this looks right here, okay? That's basically my point, but it could be a running flat, y'all, in a 1-2. It could be. Or an AB in a 1, 2, 3, 4, 5 ending diagonal C. So A, B triangle right here, because it is looking like a triangle, and then this being the ending diagonal right here for this C. Where does that leave us? Well, obviously, we will be expecting after this, I mean, this consolidation right here and this move up, we'll be expecting something on the downside. We will see. What I want to do is basically see what type of sequence it will have right about here at these levels where we are right now, actually. So what am I expecting right now on this weekly chart? Correction wave 4 for this, right? And then upside, last upside, and then I mean a bearish divergence. I will zoom out, I will zoom into these things, but hey, I just want to emphasize on these things because it has started something right here, and I've basically placed this idea exactly at the bottoms. So yeah, now the point is 88.6 right here, 17,780 would be, I mean, this zone, this entire zone right here is a massive resistance for Bitcoin. just the way it did this, and if it can actually pass as a running flat, so can this pass as a running flat. So yeah, if this actually comes, that's the next bull. And I wouldn't wonder. I mean, I wouldn't basically, I wouldn't say no to this because of the things that I'm seeing in the markets, and we know how Bitcoin was actually correlated with indices, etc. Right? Okay, thanks for confirming, DDAM. Let me say hello to some people right here. Whoever is, if you're live right now with me on YouTube, please say hi, right? And also write down your comments and stuff like that. I will actually continue the analysis, the DXI, right? Dollar index on the daily time frame. And if you've been, I mean, watching my these live streams, the Elliott Wave, those previously, you guys know that I've been tagging this as a 4 and waiting for this actually to start. And guess what? It did. It's actually, we are in the fifth. In my personal opinion, we are actually in the fifth. And what's our position? Somewhere around here is our position. And basically, what we want to do is breach this, continue down, right? And then correction and basically the panic, right? For the fifth. After this is done, right? I would be expecting something on the upside. What I would be expecting, I would be expecting an ABC in an inverted head and shoulders right here, but capped, all right, at some important, crucial fibs. This is a daily chart, and we have a lot of things to actually work with. But again, if you guys like what you see, shoot me a quick message. Let's start working together. Hi, Mohammed. Hi, Gameplays. Didam, Sivabala Prasad. Okay, cool. Oh, very complicated name there, but it's fine. Now let me move on to the EURUSD. I'm gonna take each market at a time. Okay. We are doing what I actually said we will be doing with the fractal. So I mean, with this fractal that actually happened before that. If you don't know what I'm talking about, you should just visit the previous Elliott Wave doses, and you'll actually see exactly what this is. Now, for the euro dollar, okay, I'm suspecting that we actually completed wave 4 right here with all this US elections volatility, and we're starting a bull. This is impulsive, okay? This is impulsive. But it needs to prove it. It needs to prove it. All right. Obviously, we're gonna need the correction right here in a zigzag or something like that for the EURUSD to actually gain momentum for the fifth. Right. What I would be expecting this to actually go, well, 1.23645, right, at the 88.6%, because I believe that we've actually ended that that in an A, right? In an A, B right here. I mean, complex expanding flat in B, right? So A, B, and then ending diagonal in C. 1, 2, 3, 4, 5. But we actually ended big A right here, cycle degree black A right there. And we're doing some, we have been doing some mumbo jumbo right here. ABC, right? And again, an expanding flat W. And then X false breakout. And then again, we're doing Y, right? How? A, B, 1, 2, 3, 4, 5. And then correction like this, head and shoulders and stuff like that, just the way I said on the dollar index, right? We'll see where this goes. It should gain support. It should be gaining support here in something. But I mean, should be something right there as a support. We'll see exactly what it is after the pattern actually reveals more details, because right now it doesn't want to. So right now it wants to go up, right? Just like I said, if you remember the previous Elliott Wave doses, I said right here that we are actually approaching this support, and EURUSD wants to go up. That's what I said. So it is happening as we speak. Now, next, USD Jpy. I was actually correct with this. I mean, by labeling this as a barrier triangle right about there. It did go up. It hit 61.8 percent of the C. So right here, I would say that this is it has met the minimum requirements, and it was spot on. I mean, you know, 61.8 right there. It was spot on, and 61.8 is basically it met the minimum requirements for this triangle to be valid in a Y. How? Well, A, and then this is a very complex correction. I mean, the correction starts in basically in this B wave black cycle degree. Okay, so it's a multi. I mean, it's a very complex structure for a cycle degree wave B. So we would be expecting a long consolidation period. Now we have a leading diagonal in this A, and then ABC with a triangle in B. So W, right? ABC with a triangle in B, X, and triangle right here. You see, USD Jpy really loves this triangles, and this is the daily chart, by the way, right? So WXY, which makes us tag this ABC, A, B. C, we should be going in the C. How? All right. And when? Until when? What's happening, right? I mean, when is it going to stop? Well, 88.6, 102.385 is actually the support that we actually need. Can this go below and actually tag 101.26? Of course it can. It's a B wave, right? Of course it can. So our job is to actually monitor this, because we know we're in the C wave and we need a 5-wave sequence. Be that as it may, it can only be, because it's a motive structure, the C wave, it can only be either an impulse or an ending diagonal. That's it. So we're going to treat this as such. At least now we know we've broken through, we breached the 104 levels. So once we have done that, then we would be expecting this to retest, yeah, bump its head, and that will be our wave 2 for this. We'll see how powerful the wave 3 is, but if we basically see what happened before, because that exact same pattern is actually this one, right? Only that this current, I mean our current E wave did not do the overshoot, right? Right there, it went obviously right there, tagging the 88.6 of the previous rise. Check the weekly chart if you don't know what I'm saying, but basically, look, guys, it's quite simple right here. Okay, this entire thing is actually this entire thing. With this, we tag the 88.6. With this, we're gonna tag 88.6, and we're gonna basically go W, X, or yeah, and then A, B, big move up, y'all. Big move up, y'all. All right, that's basically for the gold sellers and all that. That's basically what this is all about, right? So yeah, the market is actually keen on the USD JPY right now. It is actually driving the markets. So speaking of, you know, metals and stuff like that, previously I've been saying that, you know, gold is basically doing this type of contraction right here, and we're going up. I mean, we should be going up regardless of the structure, even if we're supposed to like fall very hard in this ABC. And the only way we will actually fall very hard is in a WXY like this. All right, WX, but we still have the upside, right, for this Y, for us to be able to, you know, drop all the way down here and then resume the bull market. But until then, we still have this A, B, and then the C wave. You will be able to see it a bit later on the smaller time frames, such as the 2-hour or something like that. But this is a daily chart, and the important thing right now with gold is that with this trend line, we've basically gained support right here, even though it was a like panic attack right here, and thinking that it will actually, you know, breach something like that. But it managed to gain, you know, support and resume. What I would be expecting would be after this correction, whenever it will come, because I don't think it's gonna come now. We both know. I mean, we all know gold, right? How it moves, and more upside correction. Follow this trend line, y'all. You know, you can actually see it where I placed it from. Follow this trend line, and that should be the bull. I mean, the next bull, and I would be expecting basically a new high right here, a new all-time high actually, right? For that, but after that, all eyes on this 4 because it is gonna come back here. All right. So yeah. Next, let's move on to indices a little bit, and I will actually be starting with the European indices this time because, you know, with the elections and all that, with the DAX right here on the daily time frame, we had an ABC, right? Well, what does that mean for us? Because, you know, I had this fractal that I've shown you before, right? The way it actually dropped before between May, December 2018, you know, the fractal, and until here, right? So you can actually see how well it actually resembles, right? Until here, it all matches it perfectly. Let me move this back, okay? But what I'm thinking is that this is even bigger than we actually thought. So basically where we are is because this fractal is actually, you know, I placed it here. So I'll focus on this today, all right? And, you know, previously, because this zone is very important right now. Why? Well, simple, ABC, W, you know? It can be like this, W, X, A, B in this type of triangle, C, boom, and then we go up, W, X, Y. Why am I saying that? You'll see later on, okay? Just, you know, hold on to your panties. I'm going to be right with you. I'm going to tell you exactly what's going to happen. So previously we retraced 61.8. Now we are at the 61.8. And if you remember the previous Elliott wave, those I said that after the, you know, last fall on this, we'll be able to resume on the upside and basically tag, you know, this one. But right here, we went above it, right? We went above it. So this makes us look at this between, I mean, this range, because this is important. This range is important between 61.8 and 17.6. I know it likes it. And even if it goes all the way up top, it's even better because of the channel. Look at this. Well, I mean, something is going to happen there. So that will be, in my personal opinion, a very nice opportunity, even if it's going to break out and this, you know, will be invalidated and stuff like that. But I don't think it will. I'm still getting my, you know, things ready right here for this potential fall. I will actually show you on the smaller time frames why. Okay, but also let's go on the UK 100 FTSE, right? It needs to show, it needs to prove that it wants to break for the bull market, and basically so we can actually treat this as a bull flag and we're going up. I know what you guys are saying. Hey, this guy is crazy. He wants to, you know, he wants to look down when the FTSE is doing a bull flag. Really? Really? When did you come to that conclusion? Because, you know, this fractal is, according to this fractal, we should be, basically this should be this type of thing, right? So we're supposed to, I mean, because we are doing a potential running flat right here in a leading diagonal 1, A, B, right? Because you can actually see it's all corrective right here. Nothing is happening, right? Only this and this are impulsive. So by measuring A with B, I have 100% right here. We breach through it. We're going through the 127.20%, and then we're shooting for 161.8. But that's actually the actual top for me, right? So most it can actually go. I mean, look, I'm gonna be, because this is a daily chart, so I'm gonna be watching 6,000 and 6,085 on the FTSE. And what am I going to be watching for? Well, I'm going to be watching for, first of all, on the lower time frames, reversed bearish divergence with a normal bearish divergence on the even smaller time frames for this last fifth waves up, because something is cooking, right? Now, allow me to move on a little bit with the you know, US indices, S&P 500 right here on the daily chart, right? So we had this, right? I gave you guys this. I gave you guys the move on the upside. I gave you guys the move on the downside. We simply, I mean, this thing does not really want to you know, to drop like that, right? What is it doing? Well, it's doing this type of patterns that it did before. I believe that's basically what it wants to do. I mean, this type of contracting, I mean, running contracting triangles, something like that, or complex WXYs, very complex structure right here. So what can it be after the COVID drop, right? And check this out. I know it sounds corny, but this is what they're doing. Look at this here, right? Look at this here. I mean, this, well, even here, it did that before, right? So I think that it is a fractal, but on a larger degree scale. If you're gonna ask me if this move down is gonna come now or stuff like that, I'm not sure. Okay, it takes a mature guy to actually say that, look, I don't have all the details right now, I cannot pronounce myself, but I have a hint that the markets should be at least correcting on the downside right here. Why? Because we are facing crucial levels and we should be able to, at least correct. If that correction is not a correction, it's an impulsive move, well, oof, right? We are in something different because this can actually pass as a triangle right here, right? In this WX, like this. Why? Why not? Right? We are supposed to be in a complex sequence before the bull market. Think about it. Now let's continue. The Dow Jones on a daily. Yeah, same thing, right? Only that this hit a lower point than the S&P 500. You see, the S&P 500 did not, right? Have a lower high. Higher low, while the Dow Jones is having a lower low. Ooh, what is this, right? Well, it can still pass as a triangle, but guess what? This triangle is inverted. Yes, it is inverted in a sense that this is A, this will be B, but this is a running contracting triangle in this B right here for this C. So because the corrections are so complex, the structure is so complex, and because of the fact that all this is a correction, this is starting as a correction, of course it's gonna correct the correction. So hence the reason for the complexity and the conflict of degrees behind all this, right? So what we would be expecting would be basically complex corrections, very complicated stuff, right? Moving forward. I am actually suspecting all this to be one of those patterns that they like. This type of thing, right? Because they're doing it all over the place, even here inverted, right? So I'm suspecting one of those things to actually happen. But we'll see. Issue is something is going to come here on the downside. The problem for the US 30, not for me, not for us, right? The problem would come if this fails to be inverted head and shoulders and it breaches through right here, because if it does, well, it's going to be a free fall, y'all. At least until 61.8, 17.6. Well, where this range, yes, of course, that's the bull market. Yeah, in any type of sequence, even if this will be as I said in the market crash sequence videos, right? Even if this is an A, B, C, D, E, we're still gonna gain support here, and that's basically the lowest points for that. For the next 2 years or so. So Nasdaq, right? Let's move on to the daily chart on Nasdaq right here. We have been, ramping up with Nasdaq right here all until September 2020. Now we're entering this type of consolidation, and check this, what it likes to do, right? January 2019, February 2020 fractal, and I believe that we're in some sort of movement like that. Well, obviously for the bull market, for me to actually say yes, we're doing this bull, we have to break out. It's as simple as that. But it will actually face a lot of trouble right there, because the correction will come anyway, even if the breakout is imminent. The correction will come. I mean, my job for this US indices and all these indices will be basically my goal moving forward will be to actually see how this move on the downside will actually come. Yep. Hi Oleg, happy Friday to you too. Thanks a lot. Yeah, again, guys, if you guys have any questions, right, write them down in the live chat right there. So now that we covered some daily charts, let's actually kick things off and continue actually with I will remain with the indices. Let me just continue with the DAX, yeah, on the 4-hour time frame right here. So I mean, as I said, yeah, we'll basically, I mean, this is a clear clear ABC. It's a complex, but anyhow, for me, this, I mean, how I'm labeling this is an expanding flat in this B wave followed by this C wave. Well, you know, I don't like the way, I mean, it's, honestly, I would rather label this as an ABC in a running flat, to be honest, right? But how? Because it's, for me, it's pretty dodgy to label this as WXY, right? It's okay, right? But the point is, it's a very complex. I mean, DAX usually, messes with your head or something like that. But let me treat this as the entire, correction, right? Even if I would be a bull right here, we have basically a reverse bearish divergence right here. And bearish divergence coming up right now after this correction, maybe it's gonna, shoot on the upside and then, bigger correction right here just to gain support on this, descending channel right here, the median line of it, right? So we can actually do something like this, and then, wow, surprise me. Because if it doesn't surprise me here, it's doomed, right? All of them will be doomed. So hold on to your seats, right? Next, let's basically take a look at the 4-hour chart on the US 30. We are doing a bearish divergence, same scenario, a reversed, hidden bearish divergence, but the Dow Jones is, showing this like potential, which if you take a look at the weekly chart, you'll basically see between 2018 and our current times, there is this type of expanding triangle, which some might call it megaphone pattern, right? I'm sure you're more familiar with that. But, we had, lows here, lows here. Okay, I want to see, because I'm really sure it's gonna correct. Even if it's gonna go on the upside, hit the 88.6 and then do that ABC, right? The question is, will it manage to gain support for this, right? And even so, it's gonna face difficulties right there. And this megaphone pattern is showing this, right? If it doesn't gain support and it breaches through, well, guess what? W. X, because look at this little thing right here, exactly on the elections. The price action vibrated. It can be anything right there, right? And it's doing this ending diagonal, so it can pass as an ABC. Remember, WX, interruption. That's how double freeze and triple freeze actually form, right? Allow me to explain. Boom, boom. Or W, and this is a triangle, still down, right? So wouldn't get my hopes up for the bull market unless they break out. Otherwise, honestly, I don't think they have the juice inside, right? Not yet. So yeah, let me just continue here. Not much activity happening in the live chat. Y'all, you need to chip in. I know you like this analysis, but hey, y'all, you need to let me know that you like this stuff, right? Yeah, okay. Next, S&P 500, 4-hour chart, right? Well, this can actually pass obviously as a complete, because we have a free wave sequence right here. Be that as it may, still the same thing. I mean, it's brewing a divergence right here. It is at the 88.6 percent of that entire fall. So yeah, naturally it will actually want to deliver some sort of resistance, bearish divergence, ending diagonal, whatever it will actually be, right? Or maybe this is a 4, we're gonna shoot up and then do that ABC right here, right? As I said, this moving average is actually pointing to the fact that this thing wants to gain support. But if this thing happens, wow, right? Allow me to actually, and I will actually tell you why I think, why I'm going to be cautious and why you should be, as a friendly, let's say, heads up from my side, why you should be careful when it comes to buying right now. I mean, buying, stocks, indices, etc. Right? I know the bull market is coming. Don't get me wrong. I mean, it is going to come. It's inevitable, and the last fifth leg on the upside for the indices will come. It's just that it needs to prove it first. So, yeah, bearish divergence is already brewing right here. Hidden bearish divergence right here. If it manages to push up, I mean, in this last move right here, definitely it's going to be diverging. And then we're going to do that A, B, C right here with the Nasdaq on the 4-hour time frame. It needs to gain support. This is a should hold, must hold. It will be the 61.8 of this entire thing. So again, 61.8 of all indices right now, especially, I mean, what I went through, DAX, Dow Jones, S&P, and the Nasdaq, 61.8 retracement when it comes, because it will come. It's a should hold, must hold. All you have to do is use the FR Fibonacci retracement and calculate your moves intelligently, just like this. Whoop. And let's say maybe it goes up 61.8, which is also the median. I mean, this moving averages. I'm using like normal 200 EMAs, right? 200 MA, 200 EMA, right? For this, for the crossovers, for this, for that, right? But yeah, I mean, to round it up, 11,450 should be support for Nasdaq, because if it's not, it's in trouble, right? And all of them are. Why am I saying that? Well, a surprise may come, and I want to give you guys a heads up right here with the VIX on the 2-hour time frame, right? Maybe this is a running flat, and we're doing, yes, we have done primary A right here in this leading diagonal. We're doing ABC, W, right? This is an expanding flat in W, right? I mean, for this B, okay? So A, B. So now you can actually follow me. W, A, B, C, X, right? And then A, B, running flat, boom. Because guess what it did before? Yes, right? You see how, I mean, you can actually see how this very much resembles this. And then, wow, we had a spike. I mean, with a gap and stuff like that. Then it went down, which it's doing right now. Right? How it went down? Well, but that's the kicker. That's the kicker. Don't let this surprise you. Okay? Just a heads up here, y'all, because obviously, naturally, if it wants to go, I mean, breaches through this and it has continuation, right? Because you can see the reverse bearish, I mean, reverse bullish divergence here on the VIX on the 2-hour time frame on this particular move as well, which, you need to take a look at this because it's crucial, it's important. Why not? I mean, what if this volatility is barely getting started right now? Especially, because I asked some questions, right? I asked some questions um, in the live chat right there. Who's the US president? Do you know? Right? Let's actually see, right? Who is? I mean, Joe Biden should be, right? But is he? I mean, because what I'm actually seeing online is that Trump is Trump, and it will actually, Trump is known for his high temper and bringing on the volatility. So, yeah, are the results clear? I mean, are we actually facing this? Is this guy gonna win? Are we gonna have like a Democratic, party? In the US, because if we are, it's just gonna be like Obama times when everything is nice and peachy, markets go up like crazy, right? But until then, I mean, when are we actually gonna know for sure? And if you guys know, just write it down right here or shoot me a comment, right? Because I still I'm still like officially there's until now, until this current present times, there is no, there is no outcome. So it might take a while. Remember what I told you on the previous Elliott wave dose that even though these elections are gonna, come and November 3rd will be the voting and stuff like that. But remember when I told you that don't expect on November 3rd to actually know who the next or current, president of the United States is. We still don't. It's November. It's been 3 days, right? So yeah, normally it shouldn't take. I mean, but it might. What I'm saying is that it might be prolonged, and this translates into volatility, transcends into some huge volatility. And if I would actually take a look at, let me just continue here. Let me look at this, right, and see. Well, okay, is this something coming on the upside? At least until until here, right, on this median line to bump its head and continue down because, whatever. Yes, right? Take a look at this. We topped out here A, B, C, W, X, false breakout, A, B, triangle, right? So A, B, and then 1, 2, 3, 4. It could be 3, 4 as well. No problem whatsoever. But hey, what if? Right? This is a 15-minute chart on the VIX. You guys know me. I don't normally, show this type of small time frames, but it is important. We are facing crucial times, so why not? Now let's move on a little bit to Bitcoin right here on this 4-hour chart because it is trending, right? Remember what I actually shown you. For Bitcoin, I'm expecting this divergence right here because, in my personal opinion, we are finalizing a wave free. It has been jumping on the upside, and all this thing needs is an ending diagonal right there, right? For something on the downside. This should hold, must hold, just like the indices, because if the VIX really, really ramps on the upside, oof, right? Free fall. Free fall and something else. It's really something else. Now, to wrap things up here, I'm gonna zoom in right now with the 2-hour time frames for Forex majors, metals, and a little bit of crude oil as well right after that, and we'll call it a day. Um, yes, you are correct, Ian. Although the politics may take some time to confirm the president, the market will basically assume Biden as the president. Yes, correct. The markets will assume. Trump is making like this, statements and basically, he doesn't want to lose. But yeah, um, allow me to resume to the. But this translates into volatility. That's what I'm saying. Even if I mean the fact that it's being postponed, the results are being postponed and something like that. This results into volatility, and basically that's what we're trading, volatility. So yeah, allow me to resume. Dollar index here on the 2-hour time frame. I don't like the fact that I don't like the way it actually dropped right here. I would like to make this clear. I don't want you to look at me as a rookie right here, but obviously we, Elliott wave eliticians actually, know that the more you zoom into a chart and try to do Elliott wave, the more noise you have, and it's hence the reason for the complexity, hence the reason for the fact, for the fact that well, hence the reason why some, or if not most, give up on Elliott wave because it's too complex, too challenging and stuff like that, right? There are easier other methods. But let me tell you this, it's not supposed to be perfect. It's not supposed to be like that because if it was, you're just going to be right each and every time. Most of the times I'm on track. Some of the times I'm not. Just like recently with this US indices that went too high too fast, right? I faced an issue right there. But yeah, well, but that's that's the process. We roll with the punches. So yeah, now as I said, on the dollar index here on the 2-hour chart, I don't like the fact that this, this is, going like this. It's not a clean, impulsive move, and I don't like labeling this as a leading diagonal even, right? But it might just work, even if this, I mean, excuse excuse me for placing the 4 here, but I just want to, I mean, for the sake of this Elliott wave though, the 4 is not here. The 4 is actually here, okay? The point is that it can work in an ABC 1, 2, ending diagonal in this, because remember, we are supposed to be in the 5th wave. Ending diagonal in this, ABC, right? So we're going to do this ending diagonal right here. Still down for the dollar index, right? The point is that right now, intraday speaking, we are basically preparing or even doing, I mean, 5 waves down, because we have a bullish divergence after 5 waves down, and we might be expecting a wave 2 right here. We'll use the fibs obviously later on. If you guys want to trade, start trading with me, just shoot me a quick message and we'll sort that out. EURUSD, right? Remember who actually told you to watch these levels for the upside, right? Well, it's starting. The 5th leg is starting, right? What is it doing now? Well, it's doing a bearish divergence because it wants to correct in the wave 2. Follow this moving average. Is going to give you a 61.8 right here for that, right? But we need a 5th wave to actually end. Do I believe it has ended? Maybe, because this is a 4 and then it should be a 5th wave. Maybe a little bit more upside, I would say, right? Just for us to actually tag something, because the sequence is quite simple. We have reached the bottom right here, immediately resolve that, swallow the entire thing, so might as well gain support even on this potential, what was supposed to be a potential bearish channel right here, to gain support here with the 61.8 retracement. So I know I'm going to move this if the higher point actually comes, but just in case we actually hit the top, right? 61.8. But if we go higher, obviously the 61.8 will go even higher as well, right? Okay, now let's just continue here. Pound dollar, I returned to the bullish mode, at least in an ending diagonal, because it gained support, and I like the way it actually moved in a 5-wave sequence right here. I really, it's a clean 1, 2, 3, 4, 5. So I would actually say that it has a chance still to reach the crucial resistances for this wave B. Although it met all the requirements, it just needs to surpass these current points right about there in order for us to actually say that yes, we are going in this wave 5, which should be something above 1.3177, right? That's for us, because if this was, I mean, if the B wave has ended here indeed, right, in this triangle X and Z, whatever, and then B has ended there, and we're doing leading diagonal 1, well, 2 must not go above the start of 1, which is basically 1.3177. That's the invalidation. If we have something on the upside right now, we're in the 5th, right? But the problem, I mean, don't get me wrong, I'm not keen on the 5th. I just want the 5th so I can get a much higher probability on this little baby right here. That's my cue, right? Yeah, so let's continue. USD Jpy. Okay. Oof. Just like I said, wow, this is happening exactly as we're speaking, right? I mean, remember I was on the daily chart on that USD Jpy and was saying that we might as well bump our heads in the 104 zone right about there after the breach for that triangle, right? So the triangle indeed, I mean, hit the 61.8 right there in this E wave. So A, B, C, D, E, barrier triangle, boom, right? We want to go down. What is this? Well, it's supposed to be wave 1 for this Z, because it's, I mean, the Z wave. It's either a triangle or a motive sequence, ending diagonal or impulse. In our current scenario, it doesn't really look like a diagonal because of the volatility behind it, and it's sustained. The yen is gaining strength because of safe haven assets. But what I'm saying is that we need to watch We need to watch, especially for some people who are actually active. Some of them are live right here. Um, Guys, you need to watch this potential wave 2 right here, and I'm just gonna draw some fibs, but those of you who are actually directly in contact with me, you guys are well informed. And if you're not, just shoot me a quick question, shoot me a quick message, and I will be able to help you. Do my best to actually help you and share my opinions right about there. So we need to watch this 38.2, and now that it started something, it will be an ABC, all right, like an A, B, C, whatever the B would be, running flat or something like that. It can even be something like this. I don't mind. It's the point that is that the 104 should be watched right here. The exact level is 103.98, but right there we need to watch that. We don't want a breach. We don't want, a breakout. We don't want something more than that. Although it is possible, right? Is that changing the structure? No, but this just means that we're going to go 106 and then, do that very large fall. So, yeah, think about it. But the fact that we broke through, we breached, tells me that we're going to gain resistance here, and I have higher confidence in this fall for the USD Jpy. So, if you want to position yourself, not only, because we don't care about this. What we care about is that big little baby right about there. But if you want to have some more higher probability, let's say, right, short before you buy, in a sense that short, stop loss at break even, buy at the 80.6. If it goes and wants to tag the bottoms, it's fine, because you're covered. You're basically in the short already. So yeah, but yeah, trade wise, that's how I would do it. USD Swiss here on the 2-hour time frame, same thing. Have a free. I don't like this, although this on the for this can actually be a triangle as well. Okay, so it might. That's why I have that trend line right here, because it should be the support. Everything, anything above this is just USD Swiss going ramp, super bullish. I don't see that, right? I see the downside. So the way I actually see that in a 1, 2, we're tagging 3 right here, 4, consolidation, whatever, right? We don't have the divergence yet, so this is dodgy, but we are doing something like that, and a little bit more downside, at least in the 5 wave. We'll see. This is very complex. This structure is very complex. It's correction. It's a correction upon a correction. So when it comes to Elliott waves, it's kind of difficult to label this one. Similar to the USDCAD as well, but USDCAD doesn't have any, a lot of aces in its sleeve right here, because we did the free wave sequence W or A, and then we did something on the upside right here, but it's clear. For me, it's a clear A WXY right here, right? A B C W X A B 1 2 3 4 5. It stopped. Then we started reversing. What can this be, right? I don't like the fact that this was, too sharp right here on the US elections. So what I think it might be, right? Chip, like this. Look at this, right? 1 2 3 4 5 A, because we're doing WX A B C, right? So yeah, watch out for that. It can still be a B in a running triangle, right? Right here as well, no problem whatsoever, right? Or a triangle, or running contracting triangle, or a running flat in this B, because it can choose right here. The B wave can actually choose what's what the pattern would be. So again, a bit of more complexity, but more downside, y'all. At least until these moves on the upside actually finish, until the dollar actually finishes the moves, the impulse in the fifth. It might be diagonal as well. So let's say motive structure, because if you're familiar with Elliott waves, you know that by motive I mean either impulse or a diagonal, right? So the diagonal on the downside, motive structure for on the downside for the DXY, and the motive structures on the upside for EURUSD, GBPUSD. Yeah. Okay. Right. Seems like. Okay. Not sure if we're back. Had an issue here. Do apologize. If we're back and we're basically good, well to go on track, please be so kind and write quickly in the chat box right there on the YouTube live chat, right? So we can actually continue. We're back. Ooh, okay, Forex Club. Thank you, bro. All right, we're okay. AUD USD 2-hour chart. Let's kick things. I mean, let's resume this. Okay, we had a W right here after that, right, in a free wave sequence. How? Well, we topped on the AUD just like I mean we did with the indices in the markets. We have ABC, complete flat, right about there. I mean zigzag, right? So we're doing, most likely we're gonna do something like that. But this X is correcting a correction, so it's natural for it to actually have more complexity behind it, especially when this B wave corrects this, where this is correcting that. So, yeah, okay. So how am I labeling this? In an X wave, primary degree, black, right here, W, X, right? So how? A, B, we finalize B. When I told you it, we will, right? I mean here, with those, I mean, all this, stuff that I'm doing. So 1, 2, we're shooting free, right? How? We tagged 100%. I think more. This is the way for this 1, 2, 3, 4, 5. So free. 1, 2, 3, 4, 5. Very big down. Very big down. Of course, they might do overshoots. Of course, they want to tag previous, NZD is already hitting a new high. I mean, it's fine with it, right? But let me actually finish up things with the AUD US dollar. So what I would be expecting would be a free wave free correction, 30.2 of this entire thing correction right here, more up towards the fibs right about there, and then panic, big down, because we're basically finalizing whatever we're doing. We're gonna finalize something, even if you guys are like ABC and we're shooting for whatever we're shooting for. I mean, in the fifth or something, but fibs don't lie. We will be tagging something big there, right? So slow and steady. NZDUSD, right? 2-hour chart. Just like AUD, I'm not gonna go back, but hey, this is a W, right? This X wave is a very complex structure because it presents complexity behind it as well. So the way I'm labeling it is in a W, X right here, and then A, B, 1, 2, 3, which should be here, right? 1, 2, 3, 4, 5, right? So watch out for this, y'all. It is preparing that. All we need to do is basically, because if you're a swing trade, I mean, if you're a day trader, obviously your focus would be this, and then that. But if you're a swing trader and if you want to get the big meat, that's it, right? So if you need help trading that on both AUD, USD, and NZD, and on Euro and on Pound, right? If you need that, but also on the USD Jpy, don't forget about this big baby right here, right? If you need help trading that, let me know. Shoot me a quick message in private. Yep. Okay. Hi, Forex Free Club. Hello, Helder. Hi, guys. Welcome back, y'all. All right. Now, let me just finalize things here with the metals, and then a little bit of crude oil as a quick dose, and we'll call it a day. Right. Whoa. Wow. Imagine gold went up, right? Just the way I said it. I mean, remember who actually gave you this? We were exactly, I mean, at these levels, and I said we're gonna jump, right? I mean, at that possibility. How? Well, this remains intact. Check the previous Elliott wave doses. The structure remains the same. A, B. We're shooting C. 1, 2, right? Don't think, I mean, even though we have a divergence right here, knowing gold, this might be a running flat in a 4, okay? All right. So watch out. Watch out. I wouldn't short right now. I wouldn't. Not really. No, not yet. I don't think, right? We'll see we do have a bearish divergence, so yes, but it's up to each and every one, right? For what I can say is that this can be 1 2 and then this is 1 2. If it is, then it will gain some. I mean, this is why I put this box right here, okay? Because obviously our next goal would be to monitor these fibs right about there. Okay, not there. We want it here. Okay, cool. 30.2, right? Let me give you some levels. 1930 and preferably 1911. Yeah, 911. Well, what is that? So I would be much more comfortable with 1912, let's say, right? 1912, even if this is an A, B, C right here for that. The problem is, it will be bigger than this, and I don't like the fact that a shorter, I mean, a lower degree correction, I mean, a lower degree would be, as a correction, would be bigger than the higher degree, because naturally we should be starting minor 1, 2, where 2 is the minor degree correction, and I mean, if this is a 1, 2 minute degree, this would be bigger than this, and you know, it doesn't fit. It should be smaller. That's why I'm saying that we might do a running flat, more up, yeah, and that's our free. And then 4, and then guess what? People will be trying to, because it's pointless trying to catch the shorts now. You know, this thing is knowing gold. This is exactly what they will do. I mean, they will short it here, and then they will try. I mean, people will try to short it at the tops, and then guess what? Boom. You know. So yeah, don't try to catch a speeding train like that. It's not gonna be, worth it. So yeah, we have a potential 5 waves on the silver, although I would be expecting a little bit more upside in a diagonal right here, knowing how it moves. We don't have a proper nice looking bearish divergence yet, so I'm suspecting this as a temporary correction. Maybe tomorrow or something like that, in the next next week or something like that, we'll actually have that. But the important thing, and the summary right here, okay, for both gold and silver right here on this 2-hour chart, we have motive structures that point us on the upside in a 1, 2, and basically we're doing the third, the third wave and the C wave, most importantly, right here after this AB. Right, so AB, we're doing C with silver. For gold, we're doing A, B, C. Important to track for me. It's important for me to track this this thing, because according to the daily chart, what I said about that W, X, we could still have this X right here, right? In which case this was our fall was an A, we had a triangle, and then C, right? ABC. So W, and then this is our A, B, C, and X. So we have to take precaution measures, because normally this should hit a new all-time high, right? It should. So the important thing, we'll be cautious, but the important thing is that I'm on track right here, and I did my part, y'all, right? I did my part right here, calling for this rise in gold markets. So yeah, again, if you guys need help, riding these waves with me, Jan, call up your wingman right about here. Your brother is in arms right here, and shoot me a quick message or call me directly or something like that. Everything is on the website contact section. You know how to reach me. WTI 4-hour time frame, last one for today. We are basically, we have been falling, as I said, right, previously. Now, the issue is that I don't like the way the structure actually looks, because this can pass obviously as an A, right? But what if this is also that type of correction, B, and then we're basically shooting in a C, although we don't need to, because from here to here we hit the 100% already right now, and we're reversing. Boo, right? If we break out, it has to prove it right here. It has to go above $39 per barrel. WTI. This is WTI on the 4-hour time frame. So it has to break out right here if it wants to prove it, so it can actually go to 161.8. But there, it will, if it does that, then for me it will be a high probability C wave short, and the move will be big because it's going to be a C wave, and what this was nothing. It's just a big one down, right? In order to complete at least, 30.6, which you haven't even, by the way, we haven't even corrected 30.2 of this entire um, April-August rise on WTI. So not even 30.2. I would be suspecting 61.8 normally because we tagged the bottoms, right? Zero. We should have 61.8 correction in a wave 2. So yeah, right. Still don't think this bull market is imminent right here for WTI. Levels to watch right now will be obviously to see if it manages or not. I would suspect not to breach 39, but if it does, then I have these levels to be concerned about. 42, right? To actually levels, I mean 42 levels for me to be able to look for potential shorts, because W, X, Y, A, B, C, boo, right? So this entire thing was a big A, right? This entire thing was the big B. So it's either one or even, because we hit the bottoms, this can be a 1, 2. It's fine. But I don't like the way this actually looks. Can we have tagged this? I mean, could we have tagged this? I mean, in an A, B right here, C? Yes, but it can still be a W. A, B, C, X, right? So it leads us to the same thing, the channel, double free. Yeah, I wouldn't, because the VIX, y'all, the VIX, and I'm gonna return a little bit to the VIX right here, yeah, for me to actually inform you guys. So this is a danger right now. I'm going to see if this will actually happen or not. But as a summary, right about here, corrections, right? Dollar index correction on the upside. It has to be a wave 2. For all others, EURUSD, GBPUSD, AUDUSD, NZDUSD, corrections depending on the formation they are. For instance, EURUSD and GBPUSD should be in a wave 2 correction type, because the GBPUSD, by the way, can also do this running flat. So this 2 will be placed here like this before it goes. Yeah, it's fine. But the AUDUSD and the NZDUSD should be in a wave 4 position, top, then bigger type of correction. So yeah, as a summary, dollar index to commence a wave 2, it has to be a wave 2. All others against it, to correct. Gold and silver, limited, a bit of more of a limited upside, I would say, but correction coming, more upside right after that. Indices, well, indices, they need to show this correction that it is a correction for them to be able to break out, because if they do break out right here, it's official. We're gonna have another big massive move on the upside, and I'm waiting for that. If we don't break out and we punch through a wave 2 type of sequence, well, we're going to have something more and more complex on the downside for the indices. That's the formula. So yeah. Well, all right. If you guys have anything, any last things to add right before we go, just shoot them right there in the live chat section. If you're watching this later, just shoot me a quick comment right there. Remember, if you like the content, guys, please support this. I need your help. Just, like it, share it, whatever you need to do, and give your brother some support right here, right? Your Elliott with Jedi. And if you want to work with me directly because you like what you see, obviously, right? Just shoot me a quick message, visit the website, check out the services, especially the one-on-one sessions. That's the best way for me to actually assist you guys, yeah? Thanks a lot. Great analysis. Thanks a lot, Forex Free Club. Yeah, love the name, bro. All right. Okay. Well, that's a lot. That's a lot to grasp, I believe, right? Well, yeah, that's enough for today, actually. Thanks a lot for joining, y'all. I wish you all the best. Stay safe in this current crucial times. And yeah, as I like to say to all my traders, until next time, stay in the green and many pips ahead. Bye for now, y'all.